Monday morning, folks, and welcome to a brand new episode of the FinMet Mondays podcast. Gold broke 2950 levels, Sunil, record all-time high, and this was also for the second consecutive week in the opposite direction of where we thought gold was going to head. It seems like there is some sort of mystery buying that's happening behind closed doors that is not related to what's happening in the markets. We spoke offline about this, and it would be good to kind of give an insight to our viewers as to what could be happening, what's propping up gold so much, and why is it being backed. Even though there are some forces that are against it, it still comes up on top.
It's a big talking point within the industry because typically the industry has certain centers. You've got Shanghai, you've got London, you've got New York, and then you've got India. And so as far as supply and demand is concerned, we look at the standard areas, look at ETFs, look at London movements, New York movements, and all of that doesn't really explain what's going on. So everyone is talking about this mysterious sort of force which is taking the gold price higher. It seems to be a situation where people are rotating out of financial markets. Given what's happening in the US, you know, we've seen $5 trillion of reduction in value of the stock market in the US. And so some of that money, as people have sold, people have moved the money into other markets. And what is happening clearly is some of that money has gone to Europe and Japan. That's why those markets are buoyant. But we believe some of that money has gone into gold. So this is not money that's conventionally in the gold market, but this is money that's parked into gold. And given the fact that the gold market itself is very small, I mean, the ETF, gold ETF in New York, which is the biggest ETF in the world, is valued at close to about $100 billion. So if you have billions of dollars flowing into this market, it can have the same impact as a small ETF boom taking place. Everybody's talking about gold booms. Everyone is talking about the fact that gold is going to reach 3,000. So everybody was buying in anticipation of 3,000. When it reached 3,000, you've seen some profit taking and it's pulled off a bit. But still, the mood is very bullish. There's still a lot of new money coming into gold. And I think, given that fact, unless something changes, we're still going to see this force, this mysterious force moving gold up.
Everyone's definitely interested to know where gold is going to move from here on onwards. We have the levels right here. Let's look into those levels quickly and understand where we need to watch out for. So, with this move last week, Sunil, our technical landscape has changed. Our first sign of reversal now becomes 2950, which was the previous all time high that we were struggling to break, at least in the last 2 weeks. The first resistance has now moved to 3018, which is slightly above the psychological 3000 mark. This is derived again from the Fibonacci retracements. I won't go much into that. The second target, which is, let's say, the more distant targets, 3100. That would be, let's say, a number that the markets would be trying to understand as to how quickly will be ascending to 3100, or are we going to see a period of consolidation between this 3000 to 3100 in the months to come. On the downside, we have significant cover between 2950 and 2880. As you can see, markets have definitely bounced back a couple of times, once in this move here around 28 Feb when it hit these lows of 2840, and also in this move last week when it hit these lows of 2880. Our first support remains at 2880 on the downside, and a second major support remains this low where it had corrected to, which is 2836. As you said, the market remains largely bullish. We would have to wait for some significant pullback to then understand where to cut our losses. But otherwise, the technical landscape is definitely on the stronger side for gold. Thanks, Neil. That was a quick roundup of the technical levels. Let's see where the market plays out. But till then, thank you so much and goodbye.